Hello, and welcome to our next NAP. NAP stands for Nonprofit Auditor Points, and I'm Irina Orishkova, your nonprofit auditor. Today, I want to talk about how we auditors test accounts payable and accrued expenses. Hopefully, that information will be useful for bookkeepers and nonprofit staff who keep records, accounting records, and maintain related information from accounting and finance standpoint for nonprofits. So let's start. When we test in accounts payable, our main concern is to ensure that nonprofit accruing or accounting for all expenses that organization incurred before the year end. We test based on accrual method of accounting. It means that at the end of the year, there are going to be some expenses that organization incurred, meaning that they took place, but the organization have not paid for them yet. So we call it testing accounts payable for understatement, because we assume that nonprofits missed some invoices that should have been accrued, meaning the accounts payable are understated. So there we need to look for unrecorded invoices. What do? Our way of doing it, it's going to the payments that happened after year end. So we looked at all the payments for a couple months after year end, and we make large selections and we ask for copies of the invoices for those selections to see if the dates on those invoices and the services performed on those invoices were before year end. If they were before year end, means that they need to be recorded as accounts payable as of the year end. And if they are, that's great. But if the nonprofit missed them, we know that they should have been recorded as accounts payable, but they were not, meaning that accounts payable are understated. So that's one of the main testing that we do for accounts payable. We call it subsequent disbursement, cash that was dispersed, payments that were made after the year end, that we're doing to find out for unrecorded liabilities at the end of the year. Another test we do to test accounts payable, we look at an accounts payable aging report. Total on accounts payable aging report have to agree to total amount on accounts payable balance sheet. So that's the first step. We look at the accounts payable aging, total agrees to accounts payable general ledger amount. And once it agrees, then we'll look at every line. Who are vendors that have invoices have not been paid? If the vendor total has a negative balance, meaning it's not reasonable, vendors cannot have negative balance. They're all supposed to have a balance due because it's a liability. But if there's balance that organization owes to vendor, that's not accounts payable, that accounts receivable. So any negative balance per vendor indicates either that nonprofit overpaid that vendor, or that's just simply a mistake. If the amounts we see small negative amounts, we typically would not raise the concern. But if we see a lot of vendors have a negative balances, that means that nonprofit does not manage that accounts payable correctly. And there most likely needs to be significant changes to their policies and procedures, understanding how to properly record accounts payable. Very often, it's not often that nonprofit overpays vendors, but it's often that nonprofit forgets to record invoice as accounts payable, and then when it's paid as a reduction of accounts payable, so it creates a negative balance. So therefore, to eliminate such mistakes, nonprofits needs to review their accounts payable schedule often, make sure that there is no simple errors on a schedule. That's test number 2. So the next test, what we do, we look in accounts payable agings. Accounts payables are fully in hands of nonprofits. So nonprofits can decide if they want to pay invoice immediately, if they can pay it later. And based on our experience, nonprofits do not make decision to pay invoice later just because. There has to be a reason. So typical reasons what we find, it's a lack of cash. So therefore nonprofits needs to manage the payment of invoices very carefully. And the second reason, if there is some conflict and disagreement on the amount of the invoice. That does not happen often, but most often reason, if we see that invoices have been outstanding for more than 60, 90 days, 120 days, and so forth, it indicates that nonprofit has a challenge with the cash liquidity. Liquidity is a problem. And from auditor standpoint, it's a concern, it's a red flag. And we would discuss with a nonprofit what can be done from the liquidity standpoint, because that's potentially a risk of the organization continue its operations. To conclude that very often in AP schedule, accounts payable schedule, aging schedule, we see that all accounts payable are current, meaning not longer than 30 days. That's reasonable. It just based on a payment cycle. If we see anything that's been outstanding for longer 30 days, we would ask why. Again, because it's fully in the ability of nonprofits to manage its payments, and typically nonprofits don't just sit on invoices. You do pay accounts payable. Typically in accounts payable can be represented by two accounts. As accounts payable, meaning when the nonprofit receives invoice from the vendor, it records it in accounts payable. But sometimes, because we're doing accrual method of accounting at the end of the year, nonprofit knows that expense has been incurred, but invoice have not arrived yet. For this type of expenses, nonprofit record accrued expense. It's also based on a management estimate, knowing about the services, but actual vendor invoice have not been received yet. So by nature, they same type of expenses, but accounts payable are supported by invoice, and accrued expenses are not supported by invoice. So what we as auditors will ask for accrued expenses, we will ask you an estimate and any internal support based on which management record the accrued expense. For example, if it's a recurring bookkeeping services, but the accountant did not provide the invoice yet, management say, hey, they do charge us monthly $2,000 based on this agreement, therefore we accrue $2,000. Some sort of support to tell us how you record that amount. If the nonprofit have some other type of payables, they might be supported by other information such as credit card payables. For credit card payables, you will have a credit card statements. They're hopefully also reconciled. If the organization has several credit card statements, they will be recorded there as well. So to summarize, as the auditors, we, based on the standards, we have to assume that accounts payable most likely is understated. Therefore, we're looking for unrecorded liabilities. And how we do it, we go from outside population of accounts payable to the payments from after the year end to see if there's anything not recorded. We also look at the accuracy accounts payable schedule. We see if there is anything just simply incorrect on the face of accounts payable aging report. If there is loan outstanding invoices, we also need to obtain understanding why they are outstanding for so long. And for accounts payable, the best support is definitely invoice from outside third party. Invoices that created internally to accounts payable needs to be supported by additional information. So there has to be some nonprofit cannot create invoice and pay the invoice, right? The invoice needs to come externally. And that's the testing of accounts payable. Also, accounts payable by its definition, they're short-term liability. So we assume that all accounts payable and accrued expenses will be paid within 12 months because they are operational expenses that which already have been used by the organization. The organization owes these funds, right? They're not debt, they're not long-term obligation, they're short-term. Therefore, we expect them to be paid within 12 months. We can also ask for support as a proof to indicate that such invoice has been paid. If the auditor needs more information and if the auditor has any concerns. That's how we test accounts payable. Thank you so much. I'm looking forward to see you for our next NEP. Have a wonderful day and be safe.